Morning, Steve Freed in Chicago with the morning grain comments. Prices overnight a little easier. I think the market's still waiting for any new news on U.S. and China trade deal. There are reports that both the president and vice premier of China want a deal, but they also want to be treated with respect, and that kind of means they want the tariffs to be dropped. A lot of people are waiting to see if U.S. trade negotiators head to Beijing before Thanksgiving. That they were offered to come there. The other thing is that most people think that the President of the United States will increase tariffs on about $150 billion worth of Chinese goods on December 15th. So one hand looks like we're not going to have a deal. The other hand looks like people are working towards a deal. An interesting thing that I heard yesterday was that some U.S. companies are seeking to buy things from other sources rather than China. They want to keep their shelves full for the holidays. Once that transition is made, I doubt if those companies go back to China. So it's going to be interesting to see if the Chinese want to make a deal, if all of a sudden they see exports to the United States drop. As far as the other news, there is talk that maybe African swine fever is beginning to bottom in China. There's talk that their hog herds expanded last month, although marginally, and there's a lot of incentive with record high hog prices in China for hog producers to add to the herds. The question is, can they do it without spreading the fever? That could eventually offer support to the bean and meal market if they need more feed to handle this potentially higher animal numbers. As far as weather is concerned here in the United States, it looks like the 2-week forecast is bitterly cold across the upper Midwest. We're watching pretty closely as far as precip is concerned. It seems like they keep talking about a big storm mid-next week, but it may be more in the south and east than across the northwest. South America looks like everybody's going to get somewhere between 2 and 4 inches of rain in Brazil and Argentina, and that adds to the resistance. There was International Grain Council said that its wheat crop still is at 762 million tons. They did raise the corn crop 5 million tons to 1.1 billion tons, and most of the increase was in the United States. But they did say that global corn deficit for the third year running in 19 and 20 was pegged at 39 million tons. So we continue to see, at least in corn, especially with this U.S. crop this year, bringing down some of the global stock numbers. It looks like we're going to get a rain finally in Ukraine and Russia over the next 2 weeks. And we want to make sure that people know that December options expire at the close today. So we'll kind of watch and see if there's any fireworks in the December contracts. On Thursday, managed funds, they sold wheat, they bought corn, they sold beans, they bought meal, and they sold oil. We look at them having, even in the wheat, short about 140 corn, and now long only 10,000 beans, and they could actually be short a little bit of beans. They continue to be long almost a record amount of soybean oil. So again, it's the end of the week. Beans nearby trading for the first time in a while below $9. Corn, D's corn's right 367, 365 is probably pretty important support. And the nearby wheat is near 511. Again, $5 seems to be a level that for right now it's hard to push down through. But with global production expected to expand in 2020, it's hard to rally the wheat market unless there's a weather scare. As always, these are my thoughts and not those of ADM or ADM Investor Services. Have a safe and profitable trading day.